Welcome back all you typical traders, your typical bull here, and I'm going to drop some real knowledge bombs on you today. So buckle up because these things are going to drastically improve your trading. And stick around until the end of the video for a channel announcement that's got me really excited. So 3 of the hardest challenges people must overcome to become profitable in any kind of trading, be it day trading, options, stocks, futures, or anything, are 1. Being patient, waiting on proper entries. 2. Using proper stop losses. And 3. Letting winners run till targets or until a sell signal is generated. And we've all been guilty of that one. And I've got some examples of personal experience trades that I'm going to show you. So there's a lot of ways to trade, but these 3 key things will kill any style of trading faster than you can say stonks. So I will speak to them in order. Before you can set a target or a stop, you of course must find an entry. And depending on the type of setups you take, this will be different for each of you. I'll speak to a few of my favorite setups that can speak to the general idea of both indicator signals and hard targets and how I personally manage them. So the first up is the supply and demand setup. Basically, if you aren't familiar with that, just check around my videos, right? So basically I mark out these levels of where I'm interested in getting long or getting short, and this is a trade I recently took on UPS here. So basically it doesn't really make much sense for me to get in just because it's not quite there yet, but it's close enough, right? Get this little bounce. Usually what ends up happening is it ends up pushing down here, and now I'm down 30% on my entry if I had got in here before the trade's even really started. And then I'm getting scared, I'm getting worried, I might even stop out here. And then what ends up happening is it falls down here, it hits your original buy place that you want to get in, and then boom, you're done. So, but just another thing, just because it gets here doesn't mean that it's time to go, right? So I have to wait for some kind of reaction. So my plan says I wait for it to come into supply or demand. This is a demand level. I get a reaction, and then my entry, of course, is going to be right here. I have confirmation, I have reaction, and I'm in early enough where half of the move isn't already over. A lot of people wait till this looks good, but they'll see this happening, they'll be like, oh, but there's a support level here, and then it gaps up above the support level. They're like, well, there's another resistance level here, and maybe I need to wait till it gets up there. Look what happens now. You've entered either here or even, let's say, here, right? And now your risk to rewards are either this big or all the way up here big, right? So that's way too bad, because now you've basically essentially given yourself a 1-to-1 or even worse risk to reward ratio. So figure out where you're interested, get long or get short, and trust your trade. It allows you to have smaller stop losses and a larger profit, right? So you have to be right on less trades than if you were to take entries way up here when it starts to look good. So another setup that I like to take is the squeeze, and this is a trade that I also took. I like to wait on clear consolidation patterns that I can draw. You can see here on the daily chart that we have a triangle pattern forming on the chart. I like to wait for that to break, and I like to see positive momentum for long or negative momentum for short, and we get both of those things here, and then a nice little pullback, right? So you pull back and then momentum turns positive, boom, I jump in right here. That is my entry. Again, this allows me to have small stops, right? See my entries right here, my stops right here. But if you're looking at this chart from a different perspective, that could be a possible short setup there, right? But it doesn't really matter. There's more than one way to trade, and it's fine. So my entries would be right in here, this break, my stops are below, and my targets are until, we'll get to that part later, but my targets specifically are until momentum rolls over or I get a sell signal. So that'll bring us to point 2, a proper stop loss. And going back to our other chart here, the most realistic place for me to be wrong is just below my demand level. If it goes below that point, I'm out. And this allows me to have a little bit of a buffer here as well, because generally I know how hedgies work, and a lot of times they will use stop losses to fill their own orders. So instead of putting it right here where all the rest of these people have got theirs who got in late, they've got their stop losses too close, I can have mine a little farther away and still be totally fine. Even putting my stop loss here, I still have, this is multiple support levels. I've got a support here, I've got a support here at this gap, and then I can even go below this low, and I've still got a very large risk to reward ratio. This is 2 to 1, this is probably 3 or 4 to 1, and that's fantastic. So, and then as far as the squeeze play goes, once again, my stop losses can be down below this trend line. It can be down below this pivot here as well, and I'm still safe and have good risk to reward ratios. And that will bring us to point 3, letting your trades run to targets. And this is a huge one, and this is going to be something that I definitely have some personal experience with, because you know, we get up here, we buy a couple 3 contracts or whatever, and we see a big move, you get up $100 and you're like, oh my god, I gotta sell. And personal experience, just very recently I took this trade on UPS. I bought 3 contracts right here at this entry level that I'm showing you guys, and I sold them right here. These 2 red candles got a little scary for me, and I freaked out. I got scared, and well, I made a mistake and I sold too early. I didn't have any reason to sell, but I ended up selling, and look what I did. I ended up taking a 1-to-1 risk to reward ratio, and look what I missed out on. Originally, my plan was to sell a contract here, move my stops up to below here, and then let the rest run. But what I did is I basically sold myself into risk reward, and it cost me about $3,000 worth of profits, because if I had just let this run to my 2 targets here, I would have ended up, you know, making a really big payday, but I didn't. And you know, that's a mistake. We all make mistakes. It's fine. You learn from those mistakes and you move on. And there are different ways you can go about managing this, right? Like with my supply and demand trades, I usually take hard targets, but that doesn't mean you have to take hard targets. You can, let's say you enter here and then you move gap up here. Okay, maybe this is your stop loss. Maybe now you move it to break even. Then let's say you gap up here again. Okay, let's find a support level. There's a support level here. Maybe now we move our stop up some more. And then let's say we see this gap and this here. Okay, so maybe now we move our stop up to this pivot. And then eventually, what ends up happening, you get a gap up here. Okay, cool. Eventually what ends up happening is you hit your final targets, or you get stopped out. And still, you let your targets run until they're done. Now specifically for the squeeze play, I want to see momentum roll over. Same story here. I was playing Fisker. I ended up making it to this point here, and getting in, you know, some bearish momentum here, and we're at a major resistance level. I was fine exiting here, honestly, but essentially if I had let this run until my final targets, I wouldn't have gotten out until here, because I have 2 ways that I exit this. I use this ready aim fire indicator as a major sell signal, which I get here. This is another one of John Carter's custom indicators, but you don't need this. You can also use just a standard momentum indicator, and what I want is for momentum to start rolling over. So basically, this is, if this were a regular momentum indicator, and which is not, this is a third of John Carter's indicators, my hero by the way, what would end up happening is the momentum indicator would start to roll over, and then of course you would get out of your trade, because that would be your exit signal. It doesn't really matter if you use my exit signals, you just have to figure out how you want to manage these things on your own. But let your winners run so that you can take basically everything that they're worth, right? If you've got 2 or 3 contracts, scale out, but do it consistently and do it the same way, and this will help your trading immensely in the long run. So that pretty well covers it for this, but I have a pretty awesome announcement to make. And for any of you that are interested in getting into options, and maybe even some of you who have been trading options for a long time now, this would be beneficial. I'm doing what I call a fundamentals of options. I know it's an original title, but you know, whatever. The No, seriously, it has some really good information. It can speak to the options newbie and even the seasoned pros alike. It'll span several videos and be sort of a gateway into a lot of new territory with options and a lot of more advanced options topics. And all I'm asking for this is that you guys go ahead and click that subscribe button so that and turn on your notifications so that you don't miss any of our future videos. And trust me, it's going to be a pretty good course. I've been working really hard on it. I'm really excited about sharing it with you guys. And my content will remain free as always, but if you do want to support the channel, I have a Patreon page and you can click the YouTube membership program and join there as well to support the channel. But that being said, I will see all of you guys in the next one. I do really appreciate each and every single one of you. You make this a lot more fun than it would be if I was just making videos for myself. Your comments are great, so keep them coming. That being said, I will see all of you next time. Cheers.